Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
Hello and welcome to the Global View. On this Thursday, I'm Andrew Gagan. Good to have you back with us here at Ausbiz. Let's check what happened overnight. MSCI's gauge of global equities ending a little changed with the US dollar gaining, gold price dipping. US stocks closed lower for a second straight session as investors took a cautious stance on policy uncertainty from the Fed while questions remain about highly valued asset prices. Micron Technology ended lower after the memory chipmaker reported quarterly results the prior session. Oracle declined on news the company was looking to raise $15 billion in corporate bond sales. And US listed shares of Chinese companies rose, led by a gain in Alibaba, which has unveiled the largest ever AI language model, Qwen 3 Max, and announced plans to open its first data centers in Brazil, France and the Netherlands. Lithium Americas listed US listed shares nearly doubled. Reports that the Trump administration was seeking an equity stake of up to 10% in the company. And shares of the copper miners tracked the rising red metal price. That's after a mine disruption in, the second largest global mine, in fact, in Indonesia because of an accident. And Britain's JD Sports Fashion reported a more than 13% fall in first half profit due to weakness in the key US market and stuck to its full year guidance, though retailer flagged ongoing caution over the trading backdrop. Well, in the US, sales of new single-family homes surged in August, up more than 20%, although the boost from declining mortgage rates is expected to be limited by a weakening labour market. And in the latest Fed speak, San Francisco Fed President Mary Daly has advocated caution in its easing cycle, saying moving forward it's likely that further policy adjustments will be needed as we work to restore price stability while providing needed support to the labour market. But these are projections, not promises. And Bank of England Governor Andrew Bailey signalling further easing, saying there is still some further journey down in interest rates to go, but exactly when that will be and how much it will be will depend on the path of inflation going down. Longer dated US Treasury yields ticked up while shorter dated yields inched lower following remarks by Fed Chair Jerome Powell pointing to caution around the central bank's next move. The US 2-year yield rising to 3.6, the 10-year at 4.16%. And Australian 3-year government bond yields rose to 3.56%. Markets here pricing in no chance the RBA will cut the cash rate at next week's meeting, with only one more cut in this easing cycle. The US dollar index was up around 0.75% on the day. The Aussie trading lower at 65.9 US cents. Check of commodities, oil prices climbed to a 7-week high as a surprise drop in US weekly crude inventories added to tightening supply amid export obstacles in Iraq, Venezuela and Russia. Brent crude futures up 2.5% at $69 a barrel. Copper has surged 4% following a supply reduction following an accident in Indonesia. Iron ore little change to $106 a tonne, and the gold price has eased as the US dollar firmed, so retreating from a record currently around $3,750 an ounce. And Bitcoin is trading around 113,000 US dollars. Let's get more on what we're seeing, particularly with a focus on US markets. Ira Epstein joining us from Linn Associates. Ira, welcome back. Let's begin with what we're hearing from the Fed. Plenty of commentary coming to us this week, most notably from the Fed chair. How do you feel as though markets are interpreting what they're hearing? You sort of sucked a bit of that momentum out of that equity market at the moment.
It's interesting. And by the way, thanks for having me, Andrew. If you go back a week ago today, and in the United States. That's when they cut interest rates. And literally since then, if you take a look at what the cash markets have done, they've added yield, not a lot, but added yield over the 7-day period. So the market isn't doing quite what everyone thought. That's number one. It's also not going up dramatically, but you're adding basis points to this each and every day. And tonight we're still pretty much unchanged in the early evening trade in the States. The Fed chair was interesting. I think he was so much more relaxed yesterday when he was in Providence, Rhode Island at the Chamber of Commerce there. And he was able to just talk more nonchalantly than the formal part of the FOMC meeting. Simply put, they're on a rate cut cycle. They're not committed to it. The vote that we saw come out of the FOMC meeting, it can go either way at the next meeting, but every meeting's what we call live, with quotes around the word live, meaning the Fed could do anything at the last minute. So we're going to have to look at the regular data as it comes out. What I'm getting more concerned about is I'm watching these rallies in the stock market, individual stocks, and watching what's going on. And you have different worlds taking place suddenly. While Nvidia did roar and make a new all-time high 2 days ago, now it's been backing off the pay. Well, 3 days ago, now it's backing off in the marketplace. I'm watching some of the stocks that are up, like Micron, up 40% for the year. And how do you buy that you think it's going to just keep going and going? So we're getting to a point where maybe a pause is in line. The other part of it is this was supposed to be August and September, the 2 weakest times of the year for the U.S. stock market. If anything, we've been setting records on a regular pace. Somewhere along the line here, you're going to consolidate that. You might be at that point right now. It's difficult for me in the gold market to tell traders to go out and buy $3,800 an ounce gold. Not that the number's high, it's where the momentum trades are coming in, and that's what I look at. When you get up to these frothing levels, I watch slow stochastic studies. Some people watch MACD, RSIs, and I'm not liking what I'm seeing right here. Suddenly the markets, all the stock indices are flirting with losing their upward momentum, and momentum often moves ahead of price. So if you have a down day tomorrow, you're probably going to see more of a drop in stocks than people think. And I'm not calling a bear market by any shot. But I am saying that you'd run the 18-day average of closes on all the indices. And as a technician, that's what I'd be looking at. Am I ready to pull the trigger right here and say, hey, go right into the markets? I'm not. That's different for me. I think that part you want to pull back on a bit.
Yeah, I note you have said there that you're waiting for a breakdown in some markets. That hasn't come, particularly what we've seen in stock markets. Also, those metals prices, such as gold. Look, Jerome Powell also talking about those heady asset prices at the moment. I mean, it's a concern for him as well.
Yeah, he didn't say overvalued. He said highly valued. He was very careful with the wording. But I do see what he's saying. I mean, you cannot say if you're looking at price earnings that you want to jump in on some of these stocks. You can say it as a momentum trader. And as a momentum trader, I'm telling you that I'm getting the first signs that the momentum is starting to wane. And if the momentum wanes, it often wanes before the price actually breaks down. I am not bearish. Don't even remotely think that's what I'm saying. I'd rather miss that leg than catch it on the first leg of it. Rather, what I'm saying is if you trade, cut down the amount of trade. Don't be gung-ho the way that you were just yet. Let the market come to you. Have your entry points. Be patient. Because if you buy the rally here, you're seeing in a lot of these stocks that you get caught in them right away. And that's not the way that you want to be investing right now. I can tell you that we love to put out ETF recommendations all the time. And suddenly I'm taking 20-cent loss. I took $1.50 loss. That's okay, because I'm looking on those trades where they're going to continue, and they're not. And I'm seeing more of those show up than usual. That's a sign of a problem.
Meanwhile, Ira, what are you making of the data at the moment? In fact, I referenced that just had those new home sales up 20%. Interesting to see what you make of that, but also that's ahead of what we're coming with PCE data tomorrow.
Yeah, and here's the other thing in the dollar. I don't know any analyst that is not bearish. That's the interesting part. And what's the market been doing? it's rallying. Even I tried today the short side. I think I was in the trade an hour and a half, 2 hours, and that was it. And the trade just took me out of it. Very tight risks because the momentum changed in it. And now the market is saying it might want to rally a bit more. Tonight you're getting a little bit of a reprieve as most of the currencies are flat tonight. The euro's up like 6 ticks. That's nothing at all. Your Aussie dollar, I'm looking, is up 5.5. You're getting banks that want to cut. The question is, can they cut? And what do they do with the Fed now that it is cutting? Those are all the important parts we have to look at. You talk about oil, same thing there. Iran in the UN today, the president, he talks about as though, he wants to talk about a nuclear treaty. And then you get the Ayatollah going, there's no talking, we're not doing it. So they're going to get their sanctions on Sunday. There's the E3 that kicks in and they'll be sanctioned. Then the question is, the president, our president, is now finally woken up and realized that Putin has been playing the fiddle and he's been dancing to the tune. And you're hearing him say he's through dancing to the tune. Either something happens, or as he said, which shocked everybody, including us in America, or Ukraine can take back all the land. First off, how? First thing, but that's not what he's been saying. A month ago, he was for Ukraine giving up the captured land. So you're seeing he feels he's been played. And when you set this man off on the wrong way, he told you this at his speech. If he doesn't like you, you have a real problem. He's not going to be getting that way with Putin. He looks bad on the world stage for being gracious, and Putin paid him back with nothing but drone attacks.
Ira, always great to get your assessment. Thanks for joining us from Linn Associates.
And thanks for having me.
Let's return to the local market as we get going on this Thursday. Expectations that we are going to begin lower. So there we go. SPI futures off almost 0.5%. Not a lot to go on today news-wise. We will get a read on job vacancies later this morning, and also just some corporate news out, Premier Investments and also Liontown. Some updates there. Stay with us, the Open, just a minute or two away.